nice. You can see time is around 8:37. And let's look into yesterday's trade analysis in Bitcoin. Usually I would upload morning itself, guys, because it's better. And you can see the market rejected price from these levels, which I have explained to you in previous video. In case if you go and see this previous rejection of price from higher levels and impulsive momentum. And here the market impulsively broke structure towards the downside. Again, the market retraced to 0.38 level, which I've already mentioned, which I've already told you. And the market came all the way to 1.68 level. And if you consider this first candle, guys, it's better to consider the opening price, but let's put on the mid of the first candle. And this is the mid of the first candle. And see in case if the market shows some kind of respect towards the mid of the first candle. You can see here it showed a bullish engulfing pattern over here, clearly signifying some sort of bullishness, guys. But you can see the previous swing over here, the high to low of this candle. And if you consider the common point between this to the common point between this, you can see the market is trading above the 550 levels, and market didn't even close above the 550 levels. You can see throughout the day, guys. Throughout the third, the market was not able to cross the 550 levels of yesterday. That's on third, and this was on second, guys. And you can see rejection of price from these levels. And again, the market came all the way here. It rejected price from these levels as well. So let's try to plot the 200 weekly VWAP level. So in case if weekly VWAP level will show any confluence here, this is on Monday, guys. So let's plot the weekly VWAP level here and see in case if weekly, you can see clearly weekly VWAP level is trading above itself, clearly signifying bearish. And price is trading below the 200 moving average as well as weekly VWAP level, clearly signifying bearishness only, guys. So let's like to plot the daily VWAP level and see in case the support anywhere the market is showing some sort of support. This is the daily VWAP level. Let's strike this out for better for ease. You can see price is trading below the 550 levels, but here it's showing some sort of bullishness, guys. But if you consider this impulsive break of this structure towards the upside, and if you consider this break of structure, guys, or you can consider this break of structure, or you can consider the initial chalk formation. But in case if you see, guys, the market tried to head higher, but it didn't show any sort of retracement here itself. And if you consider the low of this candle to high of this candle, you can see here the market didn't even show any retracement levels. If you consider this swing over here, it didn't even show any retracement, guys. If you see the common point between this to the common point between this, the market here showed retracement to 0.38 level. You can see definitely the market here shows retracement, guys. This is the 0.38 level where price showed some sort of retracement. So you can consider the 0.38 retracement, and you can see after this retracement of price rejected from the 0.38 level and closed above the 9 as well as 21 moving average as well as above the day VWAP level. So if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, guys, you can see the market came all the way to 100% move, but here the market didn't reach the 100% move, guys. So you can see clearly the market tried to head higher, but market faced rejection here itself, was not able to reach the 100% move over here. But instead, you could have easily taken long position here, keeping your stop loss just below that candle itself. You can see you could have kept your stop loss below that candle itself and targeted all the way to this 100% move. But the risk is very predefined, guys. The risk is predefined. And if you consider this swing momentum, and if you consider the low of this candle to high of this candle, you can see price rejecting from these levels. And you could have tried your stop loss all the way to this zone in case if the market closes, since the market took support here at the 550 levels, and the market should have broken this high as well, clearly signifying some sort of bullishness. But what market did is the market failed and closed below this level. And here you can see clearly again the market retraced all the way to this zone. Clearly you could have exited here itself. Or you can see the market is trying to move in a sideways manner. You could have easily exited. But if you consider this swing structure over here, guys, if you consider this whole swing, which actually broke this high, the low of this candle to the high of this candle, you can see this is the 550 levels of that momentum. This is the 550 level. And here you can add another confluence is this order block level, guys. You can see this swing structure over here. This is in confluence with this order block level as well. This is the 1 minute order block. So you could have waited for price to reach this order block level or the 50 level, which is in both confluence of this swing and this order block level. So you could have closed your position in case if the market would have closed below this level. But here you can see the market clearly rejected price from these levels and showed some kind of bullish momentum. And clearly the market formed a chalk over here. Or you can consider this chalk as well because it even closed above that zone. And And if you consider the retracement levels of this, guys, the common point between this to the common point between this, you can see rejection of price from 50 levels, clearly signifying some sort of bullishness. You can see this 50 levels where price is rejecting. And in case if you try to plot the fib extinction levels of this swing structure, guys, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move here. This is where you could have easily targeted the 100% move. So keeping your stop loss, entering your position, keeping your stop loss just below that candle itself. I hope you're understanding what I'm saying, guys. And you could have targeted all the way to this 100% move. Or or in case if the market is trading above, you could have targeted the 1.68 level, which is in confluence here. Or you could have targeted the midway between the 1.68 level and the one midway. So this is the zero point 0.5 level. You can see is rejecting between the midway of the 1.68 level, or you could have tried it all the way. I hope you are getting, guys, what I'm saying. And here you can see after this, the market was not able to cross this high. Instead, the market showed a huge rejection here and clearly formed another chalk over here. You can see that clearly market broke this level and formed a chalk here. And again, the market retraced to this fair value gaps. You can see this is the fair value gap. And you can consider this order block level as well. This is the last up candle. So you can consider this to be a 1 minute order block. You can see the market came all the way to this order block level, rejected price from this fair value gaps, and showed a huge bullish momentum like this, a huge bearish candle, which is breaking both 9 as well as 21 moving average. In case if you try to plot the anchor gap level here, this is a swing high, guys. That's why I'm placing here. You can see the market even here, it broke the VWAP level, the anchor VWAP level towards the downside as well, clearly signifying some sort of bearishness. So after this kind of candle appearance or price rejecting from these levels, guys, you could have easily entered short position somewhere here, keeping your stop loss just above that candle itself, above the order block and targeting all the way towards the downside. But you can see here again the market broke this structure as well. This was another confluence. And if you consider this swing momentum here, the high of this candle, the high of this candle to the low of this candle over here, this is the 50 level. And you can see this is the 50 level. Their price again retraced here, rejected price from these levels. So if you try to plot the anchor wave levels of this swing high, you can see rejection of price from these levels, guys. The 200 moving, the 21 moving average rejection of price, the VWAP anchor VWAP level rejection, the 9 moving average rejection of price, guys, clearly signifying bullishness. So you could have easily added on to your trade here itself and keeping your stop loss just that position. And in case if you try to plot the fib extinction levels, guys, the high of this candle to the low of this candle to the high of this candle, guys, you could have targeted the 100% move, the 1.68 level, and the 2.6 level, and the 3.61 level. You can see clearly the market came all the way to 3.6 level over here. You can see rejection of price from 3.6 level. But in case if you might have seen some sort of support here and the market is trying to move higher, guys, you can see, but here the market failed to cross this anchor gap level and rejected price from this level. So you could have just holded on to your position or you could have exited as soon as the market reached 2.61 level. You can see clearly how the market came all the way to 2.61 level. In case if you might have holded on, you could have you could have kept your stop target profit as towards this low. But it's fine, guys. You could have tried it all the way or you could have tried it all the way. Anywhere along this zone is where you could have easily targeted profits. Or let me explain to you another trade profit where you could have taken. You can see this swing structure and you can consider this to be a retracement. So if you consider the common point between this to the common point between this to the common point between this, guys, you could have targeted the 100% move here. You can see clearly. If you consider the major swing structure, guys, you can see how the 3.68 level is in confluence with the 100% move here, clearly signifying some sort of confluence, guys. You can see, I hope you're understanding what I'm saying, guys. This is where you could have easily targeted. This is what I wanted to explain to you guys. And here you can see clearly the market showing some sort of bullishness where price is taking support here. And market failed to close above this high, but again the market retraced, failed to make this low. But here you can see clearly the market broke structure here. We can consider this to be a chalk formation over here. In case if the market sentiment would have been bearish, the market would have continued towards this low and break this structure. But you can consider this to be an internal break of structure, guys, not the external break of structure. And what you can see here is after this chalk formation, you can see clearly you could have placed the anchor wave level here and see in case if the market is trying to take support anywhere along this zone. You can see clearly the market here showed a huge bearish momentum here, but failed to make a lower low here and suddenly reversed towards the upside. It's here where you could have easily taken long position, but let's see, guys, and watch. If you consider this swing low to this swing high over here, guys, as it broke this structure over here, you can consider the 550 levels over here. This is the 550 here. And you can see clearly the market came all the way to this fair value gap, and there was some kind of imbalance, guys. The fair value gap over here. You can see clearly the market came and mitigated this fair value gap. Below this level, there is no fair value gap. You can see the momentum here is a balanced boom, but again, the price reached all the way to this level, mitigated this fair value gap, and the market clearly showing signs of bullish momentum. You can consider this also as a break of structure, guys. You can see clearly the market clearly broke this structure high as well, internal break of structure, and you could have considered the order block level here. But here you can see the market retraced and mitigated this order block, but failed to make a lower low, guys. In spite the market broke this order block level, you can see after this the market suddenly retraced back and formed a chalk formation over here. This is not a clear order block sign, guys. You can see clearly this here the market clearly broke structure high, signifying some sort of bullishness, and these three candle structures with this fair value gap or imbalance candle clearly signifying some sort of bullishness. So I hope you're understanding what I'm saying. But again, the market retraced here, but failed to make, uh, but even broke this low, guys, clearly showing some sort of bearishness. In spite, if this momentum would have been occurred, guys, the market would have continued further selling towards the downside, clearly showing signs of bearishness. You can see price rejecting from this 21 moving average, 9 moving average, and showed a huge bearish candle like this. And after this, the market is trying to head higher. But you can see this swing momentum here changed the whole perspective from being bearish to bullish, guys. So this swing here is very important. And you can see after this impulsive momentum towards the upside, and you can see this kind of consolidation in price here like this, clearly signifying some sort of bullishness as the buyers here is trying to hold positions and the sellers have sellers have not much power to break even this low, clearly signifying here. And the market failing to close below this level and mitigating this fair value gap. The order block level here has been failed, but here you can see suddenly movement of price towards the upside. Again, the market retraced here and taking support from this 50 levels, clearly showing some sort of demand. And if you try to plot the anchor wave level here, you can see the market after this huge bearish momentum, this solid bearish candle formation here. You could have expected the market to form another candles like this and continue further selling towards the downside. But again, you can see this initial support over here, or you can consider this to be an order block level as well. This is the last order block, and the market mitigated this fair value gap. And you can see the market suddenly reversing. And with this kind of huge bullish momentum, guys, where the market rejected price from this anchor wave level and broke and closed above the 9 as well as 21 moving average, clearly signifying bullishness. So you could have easily entered a long position here, keeping your stop loss just below this candle itself and targeting all the way towards the upside. And if you try to plot the fib extension levels of this momentum, the low of this candle to the high of this candle to the low of this candle, initially you could have targeted the 100% move, or you can see clearly you could have targeted the 1.68 level over here. Look at this, guys, clearly targeting the 1.68 level. This is where you could have clearly made some profit, guys. You can see, guys. And after this, the market rejected price from these levels and continuing further selling towards the downside, which I would be explaining you in tomorrow's video. But you can see, guys, what I'm saying. The first impulsive momentum towards the downside. Again, the market retraced back, but internally it formed some sort of chalk. Again, retraced to 0.38 level, failed to cross move the 100%, reach 100% move here. Since this impulsive momentum towards the downside, the market faced rejection for 50 levels, clearly signifying the market sentiment is bearish only. Again, the market came and mitigated this order block level here, the last support over here, failed to make a lower low. Instead, the market showed some sort of bullish momentum here. Again, the market rejected price, came all the way, retraced and rejected price from this 50 levels and closed above this zone, clearly signifying some sort of bullishness. And again, market moved all the way to 100% move. But again, it failed to make a higher high and rejected price from this 50 levels, and it made another chop, reached all the way to order block levels, rejected price from these levels, and continued further selling towards the downside. Broke this structure. Again, the market retraced to 50 levels, and it could have targeted all the way to 2.68 level or the 3.6 level. Or if you consider the swing retracement, guys, the common point between this to the common point between this to the common point between this, which I've already mentioned to you, you could have targeted the 100% move. After this 100% move, you can see which is in confluence with 3.68 level, and after that the market here moved in a sideways manner, and clearly after this break of structure the market broke this low as well, clearly signifying bearishness. But this momentum towards the upside clearly changed the market sentiment from being bearish to bullish, and the market formed chalk. And again the market retraced to this fair value gap, mitigated this fair value gap, again broke this structure, and you can see this anchor gap level here, which is rejecting price from these levels, and the 9 as well as 21 moving average broken towards the upside and closed above that zone, uh, closed above that above the 9 as well as 21 moving average, clearly signifying bullishness. So you could have just entered long position, keeping your stop loss just below that candle, and you could have targeted all the way to 1.68 level. And this is about peg trade analysis, guys. So I have explained it to you twice. So it's better to watch my videos regularly, guys, for you to making good trading decisions. And in case if you find my videos helpful, uh, please forward it to your friends and family. So even those trading friends of yours who are trading will be beneficial, and they would definitely it would definitely help them in trading. I hope in case if you want to keep touch with me, you can easily message me through my Instagram. And that's it, guys. Thank you.